New study blames oil price volatility on speculation. Supposedly now, speculation by large investors, and so they say, not supply and demand for oil, were a primary reason for the surge in oil prices during the first half of the year, and the more recent price declines. An independent study has concluded. Well, it seems to actually be a little bit of both. But speculation, that has something to do with it too. Speculation equals greed. The report by Masters Capital Management claims investors put as much as $60 billion into oil futures markets during the first 5 months of the year, as oil prices went from $95 a barrel in January to $145 a barrel by July. They just wanted to make a lot of money. This is about money, isn't it? So, since then, these investors have theoretically or supposedly withdrawn $39 billion from those markets as prices have retreated dramatically. I guess they didn't make enough money. Well, anyway, the report says oil traded at approximately $102 a barrel Wednesday on the New York Mercantile Exchange. We have clear evidence the fund flow pushed prices up and the fund flow pushed prices down, said Michael Masters of Masters Capital Management, calling the amount of money moving into oil futures markets by large institutional investors in the early part of this year just way off the scale. They became very greedy. Yes, this is about money. Masters said its study shows investors began a massive stampede for the exits on July 15th, and that this caused the price decline. A form of craziness, insanity, in some kind of way. These large financial players have become the primary source of the dramatic and damaging volatility seen in oil prices recently, concluded the new study. This report was released Wednesday by House and Senate sponsors of bills to put additional curbs on oil market speculation and comes in advance of a new report on oil market speculation expected possibly this week by the Commodities Futures Trading Commission. The commission supposedly or should regulate commodity markets. So what have they been doing all this time? Are they just now figuring this out? Anyway, Senator Maria Cantwell, Democrat, Washington, a sponsor of an anti-speculation bill, said the new report challenges CFTC claims to date that supply and demand forces and not excessive speculation has driven up oil prices. I say it's a little bit of both, isn't it? Or it is both. This study illustrates that when oil speculators poured huge amounts of speculative money into oil markets, prices skyrocketed just as they were hoping. And when the speculative money got pulled out, prices tumbled rapidly. Another senator from North Dakota said he wants to know how oil speculators were able to drive prices up and down while the CFTC was asleep at the switch or asleep at the wheel. That's what I see. How could this be allowed to happen? What were they doing? An interagency task force led by the CFTC has concluded in a report that fundamental supply and demand factors theoretically, supposedly, influence the oil markets, and that the data does not support the proposition that speculative activity has systematically driven changes in oil prices, whatever that means. Senate critics of the regulatory agency charged that report was based on flawed evidence. The CFTC has its head in the sand, said Representative Bart Stupak, Democrat, Michigan, chairman of the House Energy and Commerce Investigations Subcommittee. The representative said the master's report shows that oil prices soared when speculators poured huge amounts of money into future markets, even as the Federal Energy Information Administration was forecasting supply would exceed demand. Which is it? Congress for months has been considering various measures, again supposedly aimed at curbing oil market speculation. But those efforts have been derailed amid disputes over other energy issues, from taxing oil companies to new offshore drilling. Well, they need to get going. Congress needs to get going. What have they been doing? All systems are failing. All systems have become broken. Greed is running rampant. That's what speculation is. Speculation equals greed. More greed than ever before. Legislation before the Senate would put limits on the amount of oil certain traders interested only in speculation or just huge profits, right, would be allowed to purchase in futures markets, and once again, theoretically, give new authorities and staff to the CFTC to regulate oil markets. But then again, it just came out that the people that are supposed to be regulating the oil markets, or the oil companies, well, they're in league. They're in concert. They work together with the oil industry. They get all kinds of perks and benefits. It's about corruption, greed, covetousness, scandals, and more corruption. Well, maybe that's why the whole world is starting to fall apart. The whole financial system, all financial systems are starting to fall. They're starting to fail. All systems becoming broken. Weaker global economy is now slowing the U.S. recovery. And despite a drop in oil prices, tight credit puts a damper on worldwide growth. For a time, it looked as though the weakness in the U.S. economy would have limited impact on the solid growth in the rest of the world, which in turn has been providing strong demand for U.S. exports. But now, there are signs that the global economy is following the United States into an economic downturn or a recession, worldwide recession, and possibly eventually a worldwide depression. And a sustained global downturn would complicate efforts to revive the U.S. economy. In other words, no, this is not good news. No. We are facing inflationary pressure almost all over the world. You have more than 50 countries with more than two-digit inflation rates, something we haven't seen in 15 years. And we're seeing inflationary pressures in the U.S. and Europe and Canada and in the industrial world. Yes, it's coming. All systems are becoming broken. And these are more signs of the end times, transition days, and there are many, many signs.